Yeah.
Hello, hello, hello. Welcome to the September market update. And interesting market update. One of the things I want to go over is the market is hot, and you hear that a lot from over the summer, over the spring, really ever since they started to release real estate back into the world. And one of the things that we're starting to notice is we want to call it lukewarm, if not cooling off. And you're going to start to see a lot of what do you call it? Headlines out in the news that talk about, hey, the market is cooling off. What is going on in real estate? Forbearances are gone. What is happening with the real estate market? So I'm here to provide you all of those updates and give you all the latest information to get you guys knowing what you need to know in real estate. So let's get started. So I'm going to start out with actually our local numbers, the Lehigh Valley, where we are here in Pennsylvania. Right now, average list price that people are receiving, or sales price that they're receiving from list price, is 102% of market value. So the great thing is that people are still getting incredible numbers and incredible value out of their homes today as we speak right now. Average sales price is actually up 13% from this time last year. So it's continuing to rise in the Lehigh Valley area. Average sales prices are up, just like they were the previous year. Inventory is continuing to go down. And you can see here that inventory did start to go back up, but I'm going to explain why it's going back down again with the real estate houses. And obviously, inventory means that number of homes on the market right now in Lehigh Valley. We have about 600,000 people in our market region, and about 812 homes right now are on the market. It was 799 when I checked this morning, so that number is always fluctuating around 800 right now. And then new listings down 900 to 930, meaning that new listings coming onto the market, as you can see here, slightly down from this time last year, about 958, but not much of a change going on from there. So let's get into really more of the national perspective, what's going on in the real estate market. That was all of our local stuff. But here, when we talk about, I want to get into what the sales prices are doing and why you're starting to see a cool down in the market right now. So percentage of selling homes that are selling over list price, meaning getting more money than they originally listed for, is over 50%. You saw that in June. You're seeing that in July, hovering right around that 50% marker. And the beautiful thing about that is it means that over half the homes that are listed right now are getting bids that are higher than their list price. You saw that on the previous slide of 102% of asking price, but over 50% of the homes that are out there are getting a offer over asking price. This was completely different than it was a year ago, where not many were getting that. And so what's happening right now, you start to see that listing inventory was starting to creep back down a little bit after you saw it to creep back up. And what you're starting to see is the normal season of what is going on right now. So you can see here in 2020, 2019. Now, 2020, don't pay too much attention to that orange line. And the reason I say that is because 2020 was one of those abnormal years where everything got shut down in March, April, May. We came back out of that back in June. It was like a rocket coming back out of that. And really, it's been pretty steady in 2020. But you can see here, you really want to look at the historical side of 2017, 2018, 2019, getting up into these winter months, as they call it, in most parts of the country. You're starting to see a decline in listings that come onto the market. It's usually your winter season that you will see that. So in Q4, expect that the number of listings that enter into the market heading into October, November, December, already in September here, is going to start to decline. And so what we're seeing also on the national front right now is showing activity is starting to slow down pretty significantly. And I'm going to get into the reason why, my thoughts are of why showing activity is starting to decline. My agents are noticing that here in our local market, that not as many people are coming to the homes. We are still getting on average 4 to 5 offers on each home that we do list. But you're starting to see a slowdown in the activity of buyers onto the market. And I think it's because there's a lot of misinformation that's flying out there in and around the market. And I'll explain what that is right now. It all affordability. And a lot of people are that we run into, they see that home prices have skyrocketed. They see it in the news, they see it everywhere, and that is the truth. I mean, you can see that this time last year, the prices are actually 13% on average, higher than they were last year around this time of the year. And so home prices are continuing to climb. So people are thinking, oh, I'm going to wait until the market crashes. I'm going to wait until homes become quote unquote more affordable. And I'm here to dispel that kind of myth and help you guys out understand what true affordability is with homes. So, yes, we are starting to see mortgage payments increasing really significantly since June of last year. And why is that? It's because of the home prices going up. Mortgage payments have gone up. If you had bought the same house in June of 2020, your average payment would have been about 1,033 in this scenario. Now, with that same scenario, you'd be about a little over $1,200 in your monthly mortgage payment. And it's because the prices of homes has gone up. And you can see here that affordability continues to decrease from January of this year, really all the way through June with these numbers, and you're at 146.3. And you might be thinking, oh, wow, that's very low. Why are you telling me to buy a house now then if affordability is starting to go down? It doesn't mean it's helping me at all. So I'm going to explain why. Historically, we're at a very, very good spot in housing affordability. You can see here from really from the mid to early 2000s and older, housing affordability is at one of its highest peaks. And so it's still a great time to buy a home. And I'll explain why. Interest rates, you can see here, still flushing out under 3% on average. Now, everybody's individual scores are going to be a little bit different. It's always based on your criteria, what you can afford, what you can't. And but on average, the interest rates in the mortgage world are under 3% still, 2.9, 2.93. You see here, over the course of the last 2 weeks, there has not been much, if at all, any movement with the mortgage interest rates. And still all-time lows right now as far as what you can get to finance right now on the open market. And I always go back to this slide because you have to understand the affordability. When the market goes down in price, typically the interest rates go up in rate. So you have to realize that even though, say, your average home is about $200,000, as soon as that interest rate starts to creep back up, and you see in the previous slide that that interest rate has not creeped up at all over the last 2 weeks. But as home prices possibly ever decline, and we also know that if you've been following our market updates, prices are not going to decline this year, and really we're going to see an average of 3 to 8% increase in prices next year, and continue to climb just because of how low of inventory we have right now. But you can see here that you want to still buy a home now and leverage the interest rates, because if you are waiting for that quote unquote market crash, you have to realize that the interest rates are going to go up and your actual monthly payment is going to go up even though the price of the home went down. So I know that sounds kind of crazy to say, but it's real. And we want to give you the real information that's going out there, that when you look at affordability, you cannot wait for the market to crash. If a lot of people were saying that back in 2020, when everybody thought that all the homes were going to crash, all the market was going to go down. And when you look at, the payments here in 2020, they've gone up. So people thought that they were actually going to go down and they were going to save more money. No, they haven't. And it's because of interest rates were basically the same thing back in June and June of this year and last year. And because prices have gone up, the prices of homes have actually gone up. Because your price of homes have gone up, the monthly payment has gone up. So don't get stuck in that thought of, hey, I'm going to wait. I'm going to think that this is going to pop. It's not. And you want to take action now. So we're here to help you understand that. And you might be also thinking, well, I'm renting, or I might want to go rent. And renting, there's definitely some pros to renting, as far as like being able to have flexible living, you're getting something brand new typically. But you have to also realize that median asking price for rent is skyrocketing, just like home prices have recently. rent has followed right in line with home prices. It has gone absolutely bonkers. And the rents that I'm seeing now, I can't believe a lot of people can afford them. So I want to let you know that, hey, why put all that money into your landlord's pocket when you can put it into your own pocket with home ownership? So this is one of the reasons why. Now, what you see here is a percentage of income needed for a mortgage payment is increasing as home prices continue to climb. So yes, as the home price goes up, your down payment is going to go up because your down payment percentage is always going to be the same, anywhere between no money down all the way up to like say 20-25% down. But at the same time, your average person is putting about 3 to 3.5% down on the monthly, or I'm sorry, not on the monthly mortgage, but on the overall for their down payment. So yes, as home prices go up, that 3.5% is always stagnant. So what ends up happening is the money that they have to put down is going up slightly. But when you put that into historical significance, NAR, Freddie Mac, all of the major mortgage guys and realtors that are out there are all saying that you don't want to spend more than 28% of really your debt to income ratio for the home itself, for your payments. And you can see here, when you talk about percentage versus historical, and then NAR's guidance, the National Association of Realtors, we're still way under that. So even though, yes, your down payment is going to be itching up because home prices are going up, you have to realize that historically, and also just from a guidance standpoint, this is way under what you should be worried about from a affordability standpoint. So it is just a great time to buy. So obviously, DLP Realty here, number one team in the whole entire state, really the last 9 years in a row. We've been number 12 in the country for sales volume, but we pride ourselves on being able to provide you all the options. We think of ourselves as like the doctor of real estate. We go out to your home, we meet you in our office, and we really go over your situation. We want to know everything that you have going on, and we are here to help you customize your perfect plan to either buy that home, sell your home, and really give you all of your options. And we call it know all your options. A lot of times you go out, find a realtor, go find information that might be out there in the news, and you're not getting all of the information. You might just get segments of it. And we're here to really provide you all the options there. And one of the things I wanted to talk to you guys about today was the leaseback program. Because in my mind, and what I'm seeing in this market right now, as equity is raised in your home, you are getting more money for your home right now than really in the history of time. You're getting more money now than you would ever have gotten ever in this history. And yet rent prices are through the roof. A lot of people are afraid to move and they don't know where to go. And they want to take advantage of selling their home and releasing the equity and paying off bills and possibly putting kids through college, and who knows what you're going to use that money for. But then the problem is, it's like, where do you go? You might be spending $1,000 on your mortgage right now, and you know you can sell your home and make a good amount of money and put money in your pocket, put money into an investment. I mean, whatever you may be, but yet you can't rent anywhere because it costs $2,000 or $2,500 to rent there. And it's just not affordable for you, and you're going to burn through your cash quickly. So here at DLP, I'll go back to this slide, is we have what's called our leaseback program. So what we're able to do is we're able to come out to your home, evaluate your home, give you all the solutions, all of the options to either sell your home, buy your home, look at everything that you have going on. But then we can also buy your home, release all your equity from it, put money in your pocket, and then have you stay in your home for a very low rent that you have. And so a lot of people are like, oh, well, what's that percentage going to be? Like I said, it all depends on what your market is, what you're doing, but it's significantly under what rent you would pay on the open market to move into a new home. So not only do you not have to deal with the stress of moving, the expense of moving, but you also get to stay in your home, not have to worry about all the repairs, all the maintenance that you might have to over the next couple of years, and stay in your home as you lease that property back from us. And the kicker here is, if you ever want to buy it back from us, we can even show you what you could buy your home back from us for. at the end term of your lease. So we have offer flexible lease terms. We get you through all of that, but it's a solution that's out there that not a lot of people, if not any that I know of, at least locally, are even offering this. That we can help you get into whether that's your next home or just stay in your home right now. Release that equity, put some money in your pocket, put some money into an investment, put some money into your kids' college funds, whatever it may be. We're here for you on that. So if that's of any interest to you, go to dlpoffers.com or call this number below. One of our agents can help you out with this. But what we'll do is we'll come out to your home, we'll evaluate everything, really get to know you, get to know your situation, what you're doing, and evaluate what that looks like, and then give you the pricing of what your home would sell for on the open market, what your home would sell for through our immediate buyout program, what your home would sell for, and then what your lease payment would be with our lease back program. So we're going to give you all those options, and we want you to know all your options. So go to dlpoffers.com, fill that out, and always feel free to go to dlprealty.com, check out our website, see some of the homes that are active out there, get a quote on the price of your home in general, and then just learn more about what you need in anything real estate. So looking forward to the rest of the month. Next month, I'm going to do a whole quarterly update of what happened all throughout the whole quarter, and I really keep you guys up to date on the exact news that you need to hear month in and month out. So looking forward to that in the month of October. But enjoy the rest of your September, and talk to you guys soon.